Hi guys, today I'm going to be talking about some of my positions personally and how I feel about the market overall, what stocks I'm looking at, what stocks I'm feeling good about, what stocks I'm feeling bad about. So, if you're new here, hit the subscribe button. If you like the video. And without further ado, let's get into just my overall thoughts. So, position just I'm personally in. And again, nothing I say is financial advice. I'm not a financial advisor. I don't really have a lot more capital to throw into my account, so I'm just kind of doing nothing. Some of my positions are going way down, some of them are going way up. The last kind of move I made was I sold a decent bit of my Amazon, I think for 25% profit, maybe 30%. I locked that in and I bought more waste management at around $200. And I'm pretty happy with that. I also bought some more Vici. I think Vici is still a good buy. I bought below 30 though, so I think that was definitely better than current price, but the current price isn't that far off from 30. It's 30.36. I don't know. Those are the two stocks I've really been loading into recently. I've also got a little bit more Uber picked up. I think Uber could definitely continue to grow going forward. I still have my 3 shares of Apple as well. Those shares are obviously generating me like 76 cents 4 times a year. So that's a win, and that's all just profit from my Apple trade. So I'm just going to keep those. We'll see what happens with Apple. I'm just kind of interested also to see what happens with the stock. Got some Take Two there, $1,216 worth. That's just a play on GTA 6. MasterCard, I definitely think MasterCard is also something worth looking at here if you want a payment processor, which I personally really enjoy having payment processors. Like, full disclosure, I also own American Express. That's obviously done quite well for me, but at one point this week, I remember being up $900, and I was like, oh, that's cool. But I didn't want to sell any because I just don't like selling that stock. I really like holding American Express because I think over the long term, American Express is one of those stocks that you just never want to let go. You never want to sell any. You just want to collect the dividend forever. Yeah, guys, I've been trying to so this is my strat too. I've been trying to get my waste management and my Vici to about $10,000 invested in, because then the compound annual growth rate of the dividend on waste management is going to be really good each year, because I'm thinking it's a very insulated business. It's going to continue to grow. And eventually, like, the present value of the cash flow is going to be like insane compared to the amount I put in as long as I wait enough time, right? I feel very bullish long term on waste management for that reason. And I've been picking up a lot below 200 because I estimate like a fair value around 220. Anyways, I want to get $10,000 in and then not reinvest any of the dividends and just collect that cash flow for the rest of my life, because they're going to continue to increase the dividend percentage, or maybe buy more when I feel like it's undervalued and just continue buying it. But I think that that's a way better strategy than buying something that maybe has a lot more growth to it, but is just riskier. Because I definitely feel like I'm very insulated, and there's definitely the chance that I could underperform with a lot of waste management. But I think that the value you're getting here is really good compared to like the normal premium that waste management demands for the amount of value that you're getting. And I really think eventually we're going to get there in terms of a valuation that makes sense and really, makes me a lot of money. I think I could just wait literally 2 years with this and it'll be a very good return. I think that the rates are going to be lower. I think the environment's going to be easier to get zoning for the landfills that they want. And I really think that waste management's going to do quite well. I also really like Vici here because of the already high dividend, and I think that it's undervalued below $30 for sure. I mean, that's obviously my opinion. I could be wrong on that. Obviously, the market can decide what the valuation is, but I disagree with the market below $30. I think that that's a good buy, and I've been continuing to buy here. I estimate like a fair value is probably between 32 to 34, maybe higher. But the dividend that you're getting is just so crazy too, because you could just continue to reinvest it back into more shares and just compound that growth into time and just make more and more and more money. I really like Vici here. I think the way that I'm going to grow this dividend over time is I'm maybe going to just pay half the dividend back into more shares so then it grows it. And then half of the dividend maybe I'll put back into my pocket. So that way I'm still profiting off of the shares, but they're just increasing the payment higher and higher. Because Vici does also naturally increase their payment for their dividends and things like that. But I really feel like waste management creates a higher amount by a percentage basis that they increase their dividend because there's a lot more growth in that business, right? I mean, it just makes more sense that the margins would be a little bit better. A lot of what Vici is relying on is good financing and management picking the right properties that are going to make sense for a long-term cash flow basis, and counting on the fact that the physical real estate in Las Vegas will continue to increase in value. Because if those venues are more plentiful and there's too much of a supply there, then it's going to create a bad situation for Vici. Definitely being a real estate owner, but I don't really foresee that being the case. I think that Las Vegas is a very important place. It's a very one of a kind, unique place, and I don't think we're going to have something that's really going to rival Las Vegas anytime soon. But gambling is being more widely accepted, but I think that's actually good for Vici being an owner of a lot of casinos. It just makes sense that if they're making money and able to pay rent, then Vici's able to make money and continue to pay me. So I continue to be very bullish on Vici as well. I think that this is kind of a mismatch, and I think you're getting a good valuation here. I think this is a very strong real estate company. I also think Prologis is a very strong real estate company, and I didn't expect them to be doing so well, but I guess people who want data centers have a lot of money, and they're spending a lot of money with Prologis. They're having these long-term rentals for their data centers, and Prologis is able to continue to make money, not having to maintain it, not having to do any of the work for it. And that's why I enjoy the stock, and it continues to also pay a decent dividend. I mean, I got a pretty good yield on my cost. I was in below 100 at some points. I got some shares, 110, I think is the highest I've paid. But it really does kind of zigzag, and it had a history between in the short term. When I was watching it, it went from like between 98 maybe dollars to 115. That was kind of the range that I saw it bouncing in. So whenever it was below 100, I was definitely buying Prologis. But at this point, I really feel like it's a little bit expensive. I think the business is still very one-dimensional, but I think that the value here makes sense. I really bought it because I thought it should be valued around here, but there has been more earnings, which have been good. I really think that this business is also going to benefit from rate cuts. So I think it could be a good time to get in. But for me personally, I would much rather pursue waste management and having more shares of that, considering like the current prices and things like that. So I'm not really looking at any more Prologis. I'm not looking to sell either. I just want to collect my dividend because I really think that the dividend long term is very good. And I think that it's a smart investment. I think it's an investment that's going to really continue to do very well, and I'm very excited for the stock. Next up, we got, what I could talk about, why I sold a little bit of Amazon. I just felt like it was a little bit lofty. I definitely still want to hold my remaining 10 shares, but I just wanted to lock in some profits, and it looked like it was the right time. I still think I probably could lock in some profits here, but I'm not totally negative on the Mag 7. I actually think right now, in my unprofessional opinion, if you really liked Meta in the 700s, you should like it even more right now. It's around $600. I'm thinking about bouncing back into Meta. I think that's kind of a smart play that I've made a lot of money with in the past. So maybe it's time for me to just buy some Meta. But again, I don't have physical cash to be able to do that right now. I'm trying to build up more cash reserve because I've been very aggressive with this portfolio so far, or my own personal portfolio, I mean. There's a lot of opportunity right now in terms of if you want the Mag 7 names, if you're bullish on the Mag 7 names, I think some of them have good valuations. I think Meta's the best one right now that I'm looking at. But again, I don't want to invest in any new positions. I don't want to pay any more taxes. My current portfolio has an unrealized gain loss of about 1,000. But I've sold about 1,700 in profit and I've gotten some dividends. So I think I'm up like 8%. So I am underperforming the market. But I'm pretty happy with these positions. I think I'm very well insured and safe for a lot of different conditions. And I think that these stocks have been bought at really low valuations. I especially think if you want a lot of like big growth and you're actually a value investor, I think that Salesforce they're buying back a lot of shares. I think this stock is very underestimated at the current price. And, I'm really surprised it's here. Texas Roadhouse, too. I thought the numbers were excellent. I just think there's not enough eyes on this stock either. There's just a lot of surprises in the market that I personally don't really understand. Why people are reacting so sharply in some ways. Maybe people are just afraid. I I just don't really understand what the conviction is because for me, I have kind of a valuation for around what I think a stock is worth. And when it slips below that, yeah, I'm buying. I'm going to buy those shares. I think you could make a lot of money right now buying Salesforce from people who are selling it right now. I'm not selling any Salesforce to anybody. I'm keeping my position. I think that long term is going to do very well. Same thing with waste management. You could have made a lot of money. I put $500 in at about 200 bucks a share, and I ended up making a lot off of doing that. There's a lot of opportunities here to just make a lot. I mean, people are really selling out of a lot of their stock. You also see people panic selling out of Take Two Interactive. And guess what? When GTA 6 comes out, a lot of people are going to be buying the stock then. Or depending on how it launches, I think it's going to launch well. But, we got to just wait and see and kind of sit back in our chairs and watch things. I'm just going to do that. I'm going to literally do nothing. That's kind of why I haven't been making as many updates because this is kind of what my portfolio looks like. And I plan to just continue to add. Yeah, I think my portfolio is very well positioned. I think all of these stocks are going to do very well. I think I'm going to have gains on all of them. And I think if I wait long enough, they're all going to make me a lot of money. I'm getting around $882 a year just to sit here. And as long as I continue to make more money than I need from my job, then this portfolio will just be extra and will definitely help me out going into the future.